Every few months, the same headline comes back that the Indian IPO market is entering a bubble territory and may be due for a correction. Every oversubscribed listing and every grey market pop gets read as one more sign that the mania has gone too far. But the data tells a quieter story. India is the only major capital market that has compounded right through the last decade in terms of primary raises. The biggest wave, though, is still ahead. 1,400 new age companies sit behind the listed names, on track for roughly $1 trillion of market cap by 2030. So let's get into what's really driving India's IPO story and where the next $1 trillion opportunity sits with Rohan and Abhishek. India's IPO market has grown 8 times over the last decade. Who is actually funding these IPO and how are investors actually perceiving India as a market?
Yeah, so it's true that the primary market has actually grown 8-fold in the last decade. India has seen over 300 main board IPOs in 5 years alone. And this is getting driven by a bunch of factors. Firstly, a deep domestic capital pool. Secondly, you have the sustained corporate earnings momentum. And thirdly, good pipeline of exit maturity companies out there. Between these is where we've seen the growth being driven. From a funding lens, it's true that the FIIs have been net sellers in the secondary market, especially over the last 3 to 4 years. From a primary market lens, though, they have increased their allocations. However, the domestic investors have actually taken a lion's share. It has grown from 15% to upwards of 50%. They now price the market. And the retail segment holds steady.
So the first half of CY26 was very thin on listing, and then there is a general perception in the market that the market has gone quiet. What is actually happening in the pipeline and what should we be watching out for the rest of the calendar year?
The first half of this year has actually been a bit thin on the listing volumes, especially after the first 2 months, and driven by the factors that we are well accustomed with. However, we have reasons to believe that the second half of the year will be much better and actually the year will come out stronger. What sits underneath the listing volumes is really the pipeline of companies which are looking to hit the market. You have a number of companies which have filed the DRHPs, which have got the approvals and which are actually hitting the market soon enough. Most recently, 2 weeks back, we've had the DRHPs of NSE and Geo being filed. These alone are expected to contribute meaningfully to the year's volumes. And in the more recent next coming months, SBI Asset Management will be the big ticket first IPO of the second half. And we will also have companies such as Manipal Hospitals, Zepto, Totalment also hitting the markets. Besides this, next couple of months, generally Diwali happens to be a very busy period from an IPO market lens. We expect CY26 to follow the suit, and NSE Geo IPOs are likely to hit the market around that time if the approvals and the book building happens per timeline. So net, we expect the year to be a pretty strong one as opposed to what we've seen in the first few months.
And if you could also walk us through what has actually happened to the new age India IPO market in the last 5 years. Where does it stand today and how do you see it going by 2030?
So new age public market companies were a rarity before 2021. They weren't really of age until then. But starting 2021, and we had a bunch of companies hitting the market, reaching a market cap of about $50 billion in a matter of just 18 months. The likes of Eternal, Nykaa, Policybazaar, Delivery, Paytm. Thereafter, we had a brief period in between. We call it the period of reset, where, and we'll talk about it in a lot more detail from a readiness lens, but where companies were transitioning from a growth only focused to a sustained growth trajectory. With that mindset, we saw the second wave of IPOs hitting the market in FY25, 26, and that was a pretty busy period. Today, we see $150 billion of public market cap being driven by 50 new age companies. We expect this to increase to about $1 trillion in the next 5 years. A quarter of this is expected to be driven by the existing listed companies, their compounded growth over the next 5 years. The remainder of it is expected to be driven by a few mega caps, which will drive approximately $50 billion each to the new age public market cap. And the second part is really a healthy pipeline of new age companies which will contribute equally. At Redseer, we've studied about 1,400 new age companies, and we've also analyzed their public market readiness. And through that analysis, we realized that there are about 210 companies which are either ready for an IPO today or will be ready in the next 12 to 24 months. That gives us that gives us confidence into the $1 trillion market cap target that we have set out for the new age companies.
Over to you, Abhishek. What makes a company ready for an IPO, and how has this evolved over the last 5 years?
Sure. So we've looked at the readiness of these companies through an index. We created something called the IPO Readiness Index. This has 5 elements to it, really. The first one is scale. At what level of revenue does the company become attractive to public market investors? The second is growth, and whether growth has been sustainable over the past few years vis-a-vis, say, the sector, vis-a-vis other peers in the space. The third one is profitability, right? Now, if you look at the first wave of new age IPOs that Rohan was referring to, the first 2 factors of scale and growth were the ones which the market was rewarding. But increasingly, as we see, profitable growth is what is being rewarded. So the third lever of this index is profitability, whether the company is on a sustained path to profitability, at least if not PAT positive already. The fourth one is valuation discipline, and whether the company is valued at a multiple at par or at a more attractive one compared to other listed peers. And the fifth one is operating maturity, right? So together, these are the elements that sort of make up the IPO readiness of a company. And we see that in wave 2, things are fundamentally changing. The market is not just rewarding growth and scale. What is being rewarded is how sustainable is really your growth, right? So in fact, if you were to look at the median of the revenue growth of companies in the most recent years, that ratio has sort of, the growth has sort of come down from earlier levels to almost half of it today, right?
So when you score the whole universe of about 1,400 companies, how many are ready today? And what sectors have deepest benches and which sectors have some gaps? And also, if you could help us understand that how readiness at the time of listing really predicts about the long-term performance of the company.
Sure. So out of the 1,400 companies that we rated, 210 companies are either ready or near ready, which means that they're ready to list in the next 24 months. If you talk about the sector composition today amongst new age companies, most of the listed companies are either across, say, retail and leisure or maybe fintech. But by 2030, we expect this to change, and we expect fintech, TMT, consumer goods, and B2B to gain more share. What readiness translates into in terms of the listing performance, really, or the stock market performance of the company. We don't see a direct correlation between the readiness and the listing pop per se. What we see is that readiness has a very high correlation with the sustained growth in the stock price performance over time. We see that companies that are rated high on the readiness index have generally shown a more sustained long-term growth in their market cap post-listing. What the readiness tells us about the road to IPO for a company is that you need to start at least 18 to 24 months ahead of the time you're planning to list. Yeah, so that's what we advise companies to do as well.
Thank you, Rohan. Thank you, Abhishek, for taking us through the data and helping us understand what's really driving the India's IPO market. Thanks, everyone, for joining us. We hope to catch you on another episode of Red Sir Podcast.